On Sunday, March 2nd, 2025, Trump announced via Truth Social that he was moving forward with the creation of a U.S. crypto reserve, initially highlighting XRP, Solana, and Cardano as key components. In a subsequent post, he added Bitcoin and Ethereum to the list, emphasizing their central role in the reserve. The announcement led to a significant surge in cryptocurrency prices. XRP experienced a remarkable 33% increase, Solana rose by 22%, and Cardano skyrocketed by over 60%. Bitcoin and Ethereum also saw gains of 9% and 11% respectively. This market reaction underscores the potential impact of government endorsements on cryptocurrency valuations. However, the excitement was short-lived as uncertainties about the reserve's implementation and ethical concerns began to surface. Critics argue that the proposal could benefit private investors with ties to Trump, raising questions about conflicts of interest and the use of taxpayer funds. For crypto investors, Trump's announcement presents both opportunities and challenges. Government endorsements can lead to short-term price surges, as seen following Trump's announcement. Investors may capitalize on these rallies, but they should be cautious of market volatility and potential reversals. Let's listen to what Michael Saylor has to say about Trump's recent announcement.
There's no way to interpret this other than this is bullish for Bitcoin and is bullish for the entire U.S. crypto industry. You know, there are conservatives that view the right path forward is just a Bitcoin-only policy because Bitcoin is a commodity, an asset without an issuer, a neutral asset, and there's no controversy. But the president's adopted a more liberal economic policy, and that's his right. He's president of the United States. I believe that the best thing for the country is to move forward with an enlightened, progressive policy toward digital assets. I think it's worth $100 trillion to the United States, and ultimately there's four different assets that people need to come to grips with. A digital commodity like Bitcoin, an asset without an issuer backed by digital power. A digital currency like a stable coin backed by a fiat currency equivalent. A digital security, an asset with an issuer backed by a stock or a bond so we can tokenize Wall Street. And then a digital token, which is an asset with an issuer that's backed by digital utility, I think.
Michael Saylor, executive chairman of MicroStrategy, presents a compelling case for Bitcoin as a strategic asset, forecasting its potential rise to $10 million per coin. He emphasizes Bitcoin's unique properties as a digital commodity and its growing importance in the global financial landscape. This analysis breaks down Saylor's key arguments and their implications for investors. Before we delve into the video, if you want the latest crypto news, market updates, and expert insights from the top minds in the industry, be sure to hit that subscribe button and turn on notifications. Stay informed, stay ahead, and never miss an opportunity in this ever-changing world of the financial market. Thank you for subscribing to our channel. Saylor argues that Bitcoin is not merely a speculative asset, but a superior store of value compared to traditional assets like real estate, equities, and gold. Saylor advocates for the U.S. government to embrace Bitcoin as a strategic asset to strengthen its economic position in the world. Saylor suggests the U.S. government should establish a strategic Bitcoin reserve, similar to its strategic oil reserve. By accumulating Bitcoin, the U.S. can benefit from its price appreciation and enhance its financial stability. Saylor believes that Bitcoin's appreciation could generate significant revenue for the U.S. government, potentially enough to pay off the national debt. By embracing Bitcoin, the U.S. can attract capital and talent from around the world, solidifying its position as a global leader in the digital economy.
I've met with a bunch of senators on the Democratic and the Republican side, a bunch of Congress people, a few members of cabinet, a few members of the administration, and anybody that wants to talk. You know me, for the last 4.5 years, I'm willing to talk about Bitcoin to anybody, anywhere in the world, every day. There's no way to interpret this other than this is bullish for Bitcoin and is bullish for the entire U.S. crypto industry. You know, there are conservatives that view the right path forward is just a Bitcoin-only policy because Bitcoin is a commodity, an asset without an issuer, a neutral asset, and there's no controversy. But the president's adopted a more liberal economic policy, and that's his right. He's president of the United States. I believe that the best thing for the country is to move forward with an enlightened, progressive policy toward digital assets. I think it's worth $100 trillion to the United States, and ultimately there's four different assets that people need to come to grips with. A digital commodity, like Bitcoin, an asset without an issuer, backed by digital power. A digital currency, like a stable coin, backed by a fiat currency equivalent. A digital security, an asset with an issuer backed by a stock or a bond, so we can tokenize Wall Street. And then a digital token, which is an asset with an issuer that's backed by digital utility. I think everybody's trying to come to grips with that taxonomy, and as the market gets more educated, we're going to see more progressive, constructive policy engagement. The key to keep in mind is that Bitcoin is not competing with the dollar. It's competing with international real estate, global equities, expensive money managers on Wall Street, and any long-range investment that somebody makes. And so right now we're about $2 trillion in Bitcoin. It's going to 20 trillion, then it's going to 200 trillion, then it's growing 20% a year. And that capital is coming from overseas. It's coming from China, from Russia, from Europe, from Africa, from Asia, from the 20th century to the 21st century. So what's compelling about it is if the United States takes a position in the emerging crypto economy, if it buys up 10, 20% of the Bitcoin network, we're going to pay off the national debt. And so why wouldn't that be in the interest of the United States? I don't think anybody's ever lost money in the Bitcoin network holding 4 years. The United States' best investments are Alaska, Mexico, California, and Louisiana, and Manhattan. We're still holding them hundreds of years later. It's a nation state. So presumably, you want to buy Bitcoin, you want to hold it for 100 years. You know where the future's going. The AIs, the foreigners, the Europeans, the 20th century capitalists, they're all going to cyberspace. And so the United States has the ability to buy this for a nickel and pay off the national debt. It'll be the greatest economic program of the 21st century for this country. I mean, I think that I'd leave that to the president's working group. They'll eventually decide what they want to do and the scale they want to do it. There are a dozen people on it, the head of the Treasury, the SEC, the CFTC, Commerce, the Attorney General. The president, I'm sure, will opine. Yeah. I'm sure you'll have leadership from Tim Scott and French Hill, both the Republicans and the Democrats. Everybody's going to have their opinions. It's above my pay grade to decide. But what I would say is this. We bought Manhattan for 60 guilders. It was a good trade. We bought Alaska for $6 million. It was a good trade. We paid $40 million for 75% of this country. It's a good trade. We can afford it. We should buy the future. Bitcoin's not highly speculative to the 500 million people in the crypto economy. It's the best performing asset in the past 15 years, and generally the best performing asset every single year. My company's gone from a $250 million investment to almost a $50 billion position in 48 months. So clearly there's enormous economic energy in this asset. It is probably the most certain thing in the financial universe if you have a long time horizon. The reason that there's so much support for a commodity like Bitcoin is it is an asset without an issuer. No entity controls it. No entity runs the network. No entity can change the protocol. No entity has enough power to impact the market trading of that protocol. That's actually why most of the focus is on the digital commodity. And that's what makes Bitcoin special. Satoshi was the insider. He left 1 million Bitcoin for all of humanity forever and walked away without ever benefiting, and that's what makes Bitcoin special. If you're looking out over the next 100 years trying to figure out how do you capitalize a nation state or a country, what you want is a digital commodity. But if you have a sovereign wealth fund, then I think it's well within the rights of the leader of the nation to decide to put, proprietary assets, securities, tokens, and the like into it. And of course, the decision will eventually be made through a fairly comprehensive political process over the next 6 months. We have till July 22nd when the digital assets framework and recommendations from the executive order are due on the president's desk. It should be interesting to watch what happens between now and then.
Michael Saylor's bullish prediction for Bitcoin is based on a comprehensive analysis of its unique properties, growing adoption, and strategic importance. While Bitcoin's volatility and regulatory uncertainty remain concerns, its long-term potential as a store of value and a catalyst for economic growth is undeniable. Investors who understand Saylor's arguments and adopt a long-term perspective may find Bitcoin to be a valuable addition to their portfolios.